I'm Jessica Minton for IB Times TV, and joining me today is Bliss from Cuttone Co. Now, this week is an interesting week on the economic calendar. We do have those FOMC minutes, but a lot of people are thinking that we're not going to really hear anything too much new, that it's more going to be in that September meeting. Do you think that the markets have already priced in a SEP taper?
I think they've gotten used to it. Whether they've priced it in fully or not is a subject of debate, which we've been having a lot down here lately. I don't think that the market's fully priced it in. I think if they come in September and they do start to taper, and remember, the taper is all about the quantitative easing. It's not about the short-term rates, which they're going to keep at zero. They've announced they're going to keep them near zero to 2015. But I think they've priced in a little bit of the taper. If we get a full-on, hey, we're going to take it down by $40 billion or $30 billion per month, then we'll see a pretty dramatic market reaction. But the FOMC minutes are going to be interesting from the standpoint, they're not going to differ from the statement that they issued when they had the last meeting in July. But what is going to be interesting is I want to see if the tenor has changed inside of the meeting minutes. It appears to all of us that the hawks have started to regain control about the QE debate, meaning even though he's a non-voting member, Dallas Fed President Fisher seems to have a bigger voice when we're talking about tapering or not tapering. And I think we'll see the change in that demeanor inside of the FOMC when the minutes are released Wednesday.
And we also are going to get some housing data this week with new home sales, existing home sales, housing prices. And we've talked in previous interviews about this wealth effect that was created by the Fed. Now, what exactly happens now if they do start to taper? How is that going to affect housing?
Well, what we've already started to see is that rates have started to move up based upon that. They think that if the Fed starts to really exit the bond market, then rates will start to normalize. And when you take a high demand player out of the market like the Fed, then rates should move up because your demand and supply equilibrium will change. So if rates start to move up pretty dramatically, it will absolutely have an effect on housing. Anybody who's not refinanced or not pulled the trigger on buying a used home or a new home will likely back off and just kind of wait and see what's going to happen. I think housing will pick up again. While the unemployment rate is still terribly high, those of us who are fortunate enough to have jobs feel pretty secure in our employment right now. And if you're a family that's been waiting to make a move on securing a home for the longer term, you need to really go ahead and do it now. Rates are still at historical lows. So I think housing will stay strong for many months to come.
Now, on the earnings calendar, we are getting results from Home Depot and Lowe's this week on Tuesday and Wednesday. And Lowe's did have some problems with some weather conditions in the last quarter, but they did pretty well. And a lot of analysts are thinking that they're going to continue to do well because of the housing data. Is it really their future guidance that we need to focus on when we do get their earnings reports this week?
Yeah, always. And for me, it's always about top-line sales as opposed to actual EPS. The EPS number comes in and I basically ignore it, especially when you get to the fourth quarter because they're doing all sorts of accounting changes and taking one-time charges to round out the year, either for tax purposes or they just need to do that. So the third quarter, or the second quarter rather, of the year is always interesting for those large home improvement retailers because this is where people are starting to kick in on any kind of projects that they want to do over the summer before school starts again. That would make sense. I put myself in that category right now. And so we want to see that they have good momentum in their earnings. Are consumers coming in and doing improvements to their houses? Are consumers coming in and buying things like lawn mowers and other types of lawn equipment because they've just bought a new house? I think that will sit well and it will mesh well with what we've seen with the housing numbers. So I expect pretty decent results out of both Home Depot and Lowe's. And I think their guidance going forward will be pretty strong as well.